For the large companies that are considered good credits, which is only a part of the market, I would say if you want to refinance, do it sooner than later, because there is scarce banking liquidity. But what we see happening for the good credits is that the banks that are still active, they fall over each other to finance the companies. For the other group, which is a large group, the not so good credits, so not necessarily bad, but active in a difficult sector, current trading that's under pressure, investigate alternatives. Looking at that, you increasingly see alternatives becoming available for the mid-market segment, and try to think, should I either combine this with bank liquidity or replace it by bank liquidity? But for the good credits, the larger companies, refinance sooner than later. I would say before summer. Yeah, well, the number of sectors that are increasingly difficult for the Dutch banks is unfortunately increasing. An example is transport and logistics, retail is an example, e-commerce is an example, but also the whole real estate sector. Those sectors, they have structural difficulties. And banks tend to be very selective in what will we look at and what won't we even touch. So you have to make sure as a company that in getting access to the scarce liquidity of banks, it requires more preparation, more quality information and a higher quantity of information. So given the fact that the Dutch landscape, the banking landscape is almost oligopolistic, the more options you have or the more options you create, the better, because it adds to the negotiating, the bargaining power you have vis-a-vis, for example, the traditional lenders, the banks. We see it to an increasing extent, which we as an advisor very much welcome, because it also makes our role more effective. We see a category of asset-based lending, which is promoted by the banks themselves. For example, leasing, factoring. We see it more and more often. We see the credit funds from the UK all looking at the Dutch market. So it will only be a question of time before these credit funds club with a traditional lender, a bank, or they will do a club deal amongst themselves. But also we see increasing activity in the high yield bond market, which is very liquid, where you can raise financing at competitive rates. Those are a few examples of alternatives that we now see moving from the large corporate market also into the mid-market arena. Well, I think it's only a question of time before either they will club with a bank or they will do an all credit funds transaction. What's preventing them? I think that the Dutch market has traditionally been relationship driven. The Dutch banks are closer to the Dutch private equity firms. They have a broader interest amongst themselves. So I think what we call in Dutch is onbekend maakt onbemind. They're tapping the water, but they're only putting their toe in as of now. But they will jump in over the next 6 months or so. That is what our expectation as an advisor is.